Greetings, grade 10 learners. My name is Mr. Simbi and welcome to today's accounting class. In today's class, I'm going to be focusing on the debtors allowances journal. Remember, when we sell goods, we record in the debtors journal. But when the customer is not satisfied with the quality or we have overcharged our debtors, then they return back the goods to us and we record them in what we call the debtors allowances journal. So with me here, I have an activity that I want us to do together. And the activity reads, enter the following transactions into the debtors allowances journal. All right. And then the information in the question reads, enter the following transactions into the debtors allowances journal of Mpumi stores for the month of March. Below you'll find transactions for Mpumi stores, and then a markup of 100% on cost is used. Now, it is very important whenever you see debtors control amount of 30,000. Then you see here we have three debtors, B Blue, 10,000, D Dre, and then P Pink. I want you to quickly punch these figures in your calculator. 10,000 plus 18,000 plus 2,000. Punch them in. How much do you get? All right, you're getting 30,000. What does it say? That means this list of debtors, 30,000, must be the same as the amount in the debtors control. Okay? Let's see more information that we were given. All right, so this is the information that we're going to use now to prepare our debtors allowances journal. Grab your pen, pencil, have somewhere to write because we're going to start doing some calculations now. Document. All right, we return, it is B Blue who returned goods to us with a value of 2,000. And we issued a debit note. Together with the debit note, when he brought back the goods, it came with a debit note. And we issued a credit note, number 014. So here, 014, the day is the first. The debtor, it is B Blue. The debtor is B Blue. Okay, how much do we record in our allowances? 2,000. How much will come to your cost of sales? Remember, cost is always 100%. And then markup in this case, we are told that it is also 100. Therefore, my selling price becomes 200. What is it that I want? I want 100. What do I have? I have 200. Multiply by 2,000. How much do we then get? We get 1,000. Here we get 1,000. That means I'll come here, my cost of sales become 1,000. Let me quickly go on to the next one. D Dre claimed an allowance for trade discount that had not been indicated on the invoice. So you can see with D Dre, they are not returning goods to us. They are just claiming an allowance for trade discount that we had not indicated on the invoice. We issued credit note for 1,200. Let's quickly record it. 015, the day, it is the 8th. The name, D Dre. And then, how much is it here? 1,200. The same amount you see here. How much are we going to record on the cost of sales? Should we record anything on the cost of sales? Were there any goods returned? No. So if there are no goods returned, we will not record anything here. So we'll put a dash to say there is nothing to be recorded over there. Let's go to the 17th. A credit note issued to P Pink for 300 for goods returned. So if goods returned, that means now I'm going to get cost of sales. I'm going to come here. 16. The day is the 17th. Who is this now? P Pink. And then, please make sure whatever I'm writing, you're also writing the same things. And then how much is it here? 300. Now you need cost of sales because goods were returned. You want 100. You have 200. Multiply by what? 300. This 300 over here. How much do you then get, dear learners? Please punch that in your calculators quickly. How much do you get? Thank you so much. You get 150. So I'll come here. I have my 150. Let's quickly do the last one. All right. I would have loved you to do it on your own, but let's do it together. Let's see. On the 24th, okay, what is my document now? Thank you. Number 17. The day is the 24th. Dre returned, so we're coming again to Dre. Returned goods and sent him a credit note for 200. So I'm coming here, 200. Already now you want to calculate your cost of sales. 100 over 200. Multiply by 200. That gives you 100. So come here, it's 100. Please have your calculator close to you because we want to add these amounts. Okay, I'm going to give the amounts to you. 2,000 plus 1.2 plus 300 plus 200. How much do you get? You get 3,700. And then you come here, you add 1,000 plus 150 plus 100. You get 1,250. When you've done this now, we should go and quickly post this. All right, so we are now going to quickly do our general ledger. So which amount am I posting here? I'm posting remember, when goods are returned, it affects how many accounts? 4 accounts, okay? 4 accounts. Just as when goods are sold, how many accounts are affected when you sell goods on credit? 4 accounts. So when goods are returned as well, it affects how many accounts? 4 accounts. Okay, so let's quickly do that. So my debtors control, remember it's an asset. So there you have your plus. And then we're now saying, if I come here, it's a minus. So I'm going to record now my debtors allowances. All right. So here's my debtors allowances. How much is that going to be? 3,700. And then I come now, I already have some allowances in my books, which is 1,400. So I'm now going to come here and then I'm going to record now in my debtors allowances. What do I say? Debtors control. All right. And then how much am I getting? 3,700. Let's quickly move on now to the other 2 accounts. Remember, we have already done the 3.7. Now we must do the 1,250. So I'm now coming to my cost of sales. Remember, it's a plus and it's a minus. So my cost of sales is going to decrease. What do I say here now? I'm going to say trading stock. Remember, here we have to show that it's from the DAJ, 1,250. I come now to my trading stock. Remember, it's a plus. So what do I say here now? Cost of sales. Cost of sales from the DAJ. How much? 1,250. Very important that we post in this fashion. We are now going to quickly do what we call the debtors list. All right. So before we do the debtors list, you have to understand that it is the debtors ledger that is created first. So let's quickly go to the debtors ledger. All right. So remember, on the debit, it's a plus. On the credit, it's a minus. All right. So we're going to come here. There is goods that were returned by here, B Blue. How much? 2,000. So we're going to come here. Who is this? B Blue. So we're going to say now, what is the source document, by the way? Credit note. So I'm just going to say credit note number 014. So I'm coming now to the credit side. It's going to be 2,000. How much do we have now? 10 minus 2, 8,000. Let's quickly go on to Dre. Dre, you see 1,200 there. So I'm going to have my credit note number 15. Okay, remember I'm coming now to the credit side. How much do I record? 1,200. 18,000 minus your 1,200. How much do you get? You end up with your 16,800. But you can see here that Dre also returned goods here on the 24th. So I'm just going to record it so long. CN 017. You're going to get a minus again of how much? 200. So I'm going to have 200 here. So you're now saying 16,800 minus 200. It's going to give you 16,600. After D Dre, let's go to P Pink. P Pink was already owing us 2,000. But P Pink returned goods, remember, of 300. So I'm going to record again my credit note, number 16. I'm bringing it to the minus side, and then I have my 300. 2,000 minus 300, 1,700. And then I'm now going to show you something very interesting, the accounting equation. Let's quickly see how we would do the accounting equation. But maybe before I go to the accounting equation, which I know you are going to enjoy, how would I then take these amounts and show them on a debtor's list, before I do the accounting equation with you? How would these amounts appear on a debtor's list? Okay, so remember, there is the 8,000, 16.6, and then the 1.7. This is what my debtors are now owing. So I'll come, and then I'm now going to say on the debit side, B Blue, how much is he owing us? 8,000. And then D Dre, how much is it? 16,600. And the last one is P Pink. How much is P Pink owing us? 1,700. Quickly have your calculator close to you. We want to add these ones now and see how much is it going to give us. So I'm going to give the figures. I'm going to shout the figures. It is 8,000 plus 16,600 plus 1,700. How much do you get? You get 26,300. 26,300. Now that we are done with this part, we can now go and see the accounting equation. I know most of you would want to see how would we do the accounting equation. There is the accounting equation. Remember that goods are sold at 100% markup. Remember the trick, when goods are returned, how many accounts are involved? 4 accounts. So let's quickly see now. Here it says B Blue returned goods to the value of 2,000 together with a debit note, that is 014. Which account do I debit? Debtors, allowances. And once I debit my debtors allowances, remember, it is decreasing my sales, which is my income. That means I'm now coming to my owner's equity minus. All right? Minus how much? Here, returned goods of how much? 2,000. Minus 2,000. And then I'm going to come now to the account credit. Account credit. Which account do I credit? It is my debtors control. And if I credit my debtors control, knowing that debtors control is an asset, that means my asset is going to be minus 2,000. Liabilities, no effect at all. But then remember how many accounts are involved? 4 accounts. Do you still remember the other 2 accounts? So the other account is going to be trading stock. All right? Trading stock. And trading stock is an asset. So when goods are returned, I'm going to debit my trading stock. Therefore, I'm coming here now. Do I record the 2,000? No. Which amount do I record? I want the cost, which is 100, over what I have, which is 200. Multiply that by the 2,000. That will give me now my 1,000. So when I come here, I'm going to say on my assets plus 1,000. And then when I come now, which account do I credit? I will credit my cost of sales. And my cost of sales, remember cost of sales, I would have regarded it as an expense. Now, when I am having debtors allowances, I am decreasing now this cost of sales. Hence, I'll come here on my owner's equity and I'm saying plus 1,000. Does it affect my liabilities? No. Therefore, it is no effect. They have 0. Now, let's see what it says on the 15th. D. Drake claimed an allowance for trade discount that had not been indicated. So here there is no return of goods. That means, am I going to have 4 accounts or 2 accounts? I'm going to have 2 accounts. That means I'm not going to record anything in this row. I'm just going to come here and I'm going to debit my debtors allowances. And remember, once you debit your debtors allowances, what happens to your owner's equity? Decreases, minus 1,200. Which account do you credit? Debtors control. And once you credit debtors control, what happens to your assets? Minus 1,200. Do you have any effect on your liabilities? No effect, so it will be 0. What do we do with this column at the bottom? Nothing. Why? Because when there are no goods returned, it will affect only 2 accounts. Dear learners, we're going to go for a quick ad break, and then I'll see you after the ad break.